Let's now see what happens in case there are certain assets which qualify the definition of asset for wealth tax purposes are held by a minor child. Now this child can be a stepchild or an adopted child, but not a married daughter. Married daughter means a minor married daughter. Okay, so if they hold certain assets, what happens and how are they treated for wealth tax purposes? Let me just draw a simple diagram and explain this to you. So let's say there is a minor child, right? He owns certain asset. These asset, and let's say these are the father and the mother. Now what happens is, first you compute the value of these assets as per Wealth Tax Act. Okay, and the value has to be included case 1 and case 2. Case 1 is when the marriage subsists, which means they are still married, they are living together, and does not subsist. So when the marriage subsists, then the value of these assets as per Wealth Tax Act has to be included in the income in the hands of the parent who has larger income or larger wealth tax. So let's say if the father has asset worth rupees 50 lakh and the mother has 40 lakh, then the value of these assets will be included in the hands of the father. If the marriage does not subsist, then whosoever is maintaining this minor child, so if the minor child is living with the mother, then the value of these assets will be added in the hands of the mother. Okay, if it's the father, it is included in the hands of the father. Okay, so that's the way it works. And then there are certain excluded assets for which the treatment is different from this one. That we will see when we get back to the slide. Asset held by a minor child shall be included in the income of the parent as under. Where the marriage of the parent subsists, then parent, mother or father, whose net wealth, excluding the assets of the minor, is greater. So in our example that we saw, when the net wealth of the father was more, it was included in the hands of the father, right? If the marriage does not subsist, parent who maintains the minor child, means with whom he lives in the previous year. Okay, so in a net, either the person or either the parent whose net wealth is greater, or the parent who maintains the child if the marriage does not subsist. Where such assets are once included in the net wealth of either parent, father or mother, such assets shall be included in the net wealth of the same parent in succeeding year, unless assessing officer, after giving other parent an opportunity of being heard, thinks that it is necessary to do so. The word thinks is missing in this text. Okay, so once included in the hands of either the father or the mother, it will continue to be do so. So every year on year, the assets will be included in the hands of the same parent, unless the assessing officer, after giving the parent opportunity of being heard, considers that it should be included in the wealth of the other parent. Exclusions. As I told you, this is not applicable to all the assets of minor child. Now the following assets acquired by a minor out of the following incomes are not included in net wealth of the parent. So if suppose the minor is earning certain incomes out of the following works, which is this, okay, and out of this income he creates an asset which is asset for wealth tax purpose, then it will still not be included in the wealth of the parent, right? So the first one is manual work done by him. Let's take an example. Suppose M is a minor. Okay, he does some manual work, or he plays the role of a child artist. There's so many of them coming on various serials today. And let's say he earns 10 lakh rupees. Okay, out of these 10 lakh he buys an urban land. Now this asset, even though it's an asset for wealth tax purposes, it is owned by the minor, is earned by him out of following income. So these are falling within the exclusions provided for Income Tax Act, and hence shall not be included in the income of the parent. Manual work done by him, activity involving application of his skill, talent, specialized knowledge and experience. Right? So if you create an asset out of the following income, if a minor creates an asset out of the following income, that will not be clubbed in the hands of the parent. And the last point is that clubbing of income not applicable for minor child suffering from disability specified in section 80U. Again, this is something which we discussed earlier as well when we were discussing the deemed asset concept, and this is applicable there as well.